Hello traders, this is Dimitris Haralampidis and this is a daily summary a bit early today. If you follow closely snail-trading.com, you have already noticed that I didn't update my London session overview, neither the New York session overview, and probably I won't update Sydney and Tokyo the next day, in a few hours that is. And that's because the single event that is important today is the Brexit referendum, and unless we have an answer on that, there is no meaning of analyzing anything else other than technicals, of course. And I'm making this video because there were some bounces and rallies in several crosses, especially on the pound, that some of them are game changers, some of them are not, and this will be my final view on the markets to you, presented to you. Of course, as I wrote on the special article for the Brexit, I strongly advise you not to trade this event. It may be a great opportunity for large profits, but considering the fact that the markets are there the whole year and 24 hours a day for 5 days a week, there is no need to accept such a big risk in order to cut some pips. There is plenty of time to cut those pips later, but again, this is your decision to make. In this video now I'm gonna try to fast forward and cover everything up, and here I am with the Australian dollar, and this is the 1 hour chart, and I will see how the fifth wave is extending higher. Nothing wrong in terms of Elliott Wave analysis. It is even better because now wave A will become equal to wave C will become equal to wave A in just a few pips higher. And if we go on the larger time frame, the 4 hour chart, we will see that this is probably somewhere near this 78.6 Fibonacci retracement. It will come somewhere up here, probably. We will see. There is also strong resistance level here, but we remain with our bearish scenario here for the Australian dollar, because that's what we believe based on our Elliott Wave count on larger time frames. Looking at the daily chart, we see that prices tried 2 days ago to move below this SMA, didn't manage to, and then we had a strong bounce. It's a bullish signal, but our Elliott Wave count, broader Elliott Wave count, suggests another thing. And if we go on the weekly chart, we will see that also the 21 week SMA suggest that some bullishness is coming here, but nothing is completed. This is not a closed weekly chart. We don't want to see the week closing here for our count, but as long as this count this candle is still developing, the bullishness is temporary in our view. Going directly now fastly to the euro dollar, and we saw another high there also, and with our latest update we had warned about the extreme volatility that will take place in that pair as much with the others. So we have to consider a much bigger correction here. We still believe that the euro is long-term negative, so looking at the 1 hour chart, we made all those changes here to allow for higher levels before the continuation to the downside, and going on the 4 hour chart we see a much better and clearer picture of that, which means that here we have ABCW, ABCX, ABCY that may be not already completed, but if we open here this a Fibonacci retracement, we see the importance of this of current levels, because it's the 61.8% retracement, all of this high here and these levels here and here. This is a very, very important level. 114 level is very important, although it could be price may continue higher up here, but I don't think so if this count is correct. So let's go on the daily chart, and we see these ups and downs here have made the SMAs gone crazy for a very long period of time. but we expect this correction to finish soon and prices to continue to the downside from here. Looking at the daily up the weekly chart, we see again the bounce from the 21 period weekly SMA, but again this candle is not finished. It is still in development, so nothing special for the weekly chart here. Moving next is the British pound, of course, the currency pair that will be mostly traded during the today's event, and we had to make strong changes here. We have adopted a more bullish view for the pair. I don't know what does this mean for the outcome of the referendum, but besides we have only the bullish alternative on the chart, there is a bearish alternative that it is much more bearish than before. And this is the 4-hour chart. I'm going to the 1-hour chart to see nothing really interesting to see here. This is a 5-wave move to the upside. Somewhere it will finish around this level, which is that is diverging with the RSI. And I'm going directly to the weekly chart to show you what happens here. As I told you with the video, as I warned you with the video for the Brexit special article, this SMA here is providing solid resistance, and this is what we expect to continue to see here. Even if this count that suggests that all 5 waves have completed here, and thus we have one A, B, C for 2, and this is part of wave 3, we expect a correction to the downside and then a bounce to the upside. Besides that, there are other possibilities for this count, for this broader count, and if that means that we excuse me, the other possibility is that this is part of a wave 2, and we're expecting a wave 3 to the downside that will move the pair to much lower levels. And of course there are also other possibilities, for example, for this whole move being something like an ending diagonal, of course, that again is very bearish. I decided to keep on the chart this bullish view, but depending on the outcome of the referendum and the reaction of the pound, we will have to re-examine this count after the event. Again, the fact that made us change this count is that we had a break above the 148.94, which entered the territory of wave 1, and that invalidated our count that was 1, 2, 3, 4, and 5 to the downside. I didn't have much time, by the way, to go deeper into those waves and try to find alternatives. There may be alternatives, like for example this wave 5 and wave 1 to finish here, and if that's the case, then we see that this count is not invalidated, and there is a possibility that we have A, B, and C, or W, X, Y here for wave 2, and then this would be again wave 4 and another drop to the downside. So there are alternatives, still bearish. I personally prefer a more bearish outlook for the pair during the event, after the event. So I just decided to put on the chart the bullish alternative, but I warn you that this is not a sure thing, and I warn you again that you shouldn't be trading this instrument and any other instrument during this event. But in the sake of analysis, those are my views. My personal preference is that the pair will continue to the downside after the event, possibly to much lower levels, but I want to see more confirmation of that before I decide to enter into the trend. And of course, I already explained you what are my first alternatives. I will get a closer look into this scenario later, having more time, to be something like, as I said, to be the wave 3 finished here, and then we have 4, and 4 finished here, for example, and then A, B, C for wave 5. WXY for wave 2, and then we have wave 3 down here, and this is wave 4, and a continuation for wave 5 to the downside. This is another alternative. I'm not going to talk more about the pound, I'm going directly to the New Zealand dollar, and again here this is another pair that is very near the validation of the count in larger time frames, and I'm gonna go directly to the weekly chart to show you what I mean. We have a very strong bounce, 1, 2, 3, 4 days of rebounding for the pair of the intersection here of those two SMAs, and that's a clear bullish sign. But looking at the daily chart, we see that current levels are very important levels for our bullish count and our bearish count, excuse me, and we can see that wave 1 is here. So prices so far did not invalidate this wave 4, so it is still valid, and it's now it is now about to face resistance at the 78.6% retracement of this wave 3, if it is true, and on the upper boundaries of this pretty large midterm channel, and I expect prices to reverse lower from here. So if we go to the 4-hour chart, I didn't have time to adjust those, I'm sorry. We can also see here on the 14-period RSI that we have a strong divergence between wave 3 and wave 5, which is very usual. And looking at the 1-hour chart, we continue to see that as an ending diagonal. 1, 2, we have adjusted this wave 3 was before here, and we consider this A, B, and C. This could be wave 4 inside wave C of 3, and wave 3 ended here. Then we have a clear ABC here and an ABC up here, and what you see here is the Fibonacci expansion of the distance traveled between wave from 0 to 3 and from expanded from 4, which is a very common projection for wave 5, and we see the 61.8, and we see that we are already there. So we have on the daily chart we have the 78.6% retracement, we have this long-term channel, mid-term channel, and we have also on the 1-hour chart this target for wave 5, all at the same place. Our Elliott Wave count expects a reversal to the downside, so we stick with that and we will see what will happen. So I'm going now to the Canadian dollar, and this is the loonie, and of course we had a sharp decline there, but again nothing that to invalidate our count. Here we can't see anything special on the weekly chart, only that we have a fight between the oscillator and its 9-period SMA. Going on the daily chart, again we see prices having difficulties to move above this 55-period SMA. This is today's candle, this is yesterday's. This SMA provides resistance. We need to see this resistance break for this will open the path towards the 144-day SMA. Going on the 4-hour chart, we see again this SMA provides very strong resistance, but the RSI is curving like that, and it looks like it is preparing for a bullish reversal. Going on the 1-hour chart, we see that this was not indeed the rebound. We have a very deep retracement, but prices sharply rebounded and came back above the 78.6% retracement, something like this wave 2 here. And if this wave count is correct, we shall see a very strong rebound for this level during the announcement of the referendum, and this is what we expect. Of course, price is moving below this level, which is 1.2654. Will invalidate this count and will open the Pandora's box for more losses for the Canadian dollar, and if you like, that will be more losses for for the US dollar, and that will be more losses across the board and not only for the loonie. So that's all for the loonie. Moving directly to the Swiss franc, we also saw another false breakdown of that very annoying, if you like, the very annoying. I'm going this very annoying range, and now we are below this range. We are below this range, and we are testing it from below to see if it will hold, and we will have a continuation to the downside. If we see what is going on the 4-hour chart, we see that nothing has been decided yet, because this level here is a level of support, and it is also the 78.6% retracement of that large rebound here, and therefore if this level holds, which there is high possibility that it will hold, because we see high divergence here also, we will have a very strong rebound. Those two SMAs again play an important role in keeping the momentum down for now. And if we go to the daily chart, we see that the extension of this trend line that connect those lows here, it is now also tested, and therefore there is a possibility that we will see a reaction at this level from those traders that are trading on the daily chart, and usually they are trading big amounts on such large time frames. But again, it is not the technical view only. We have a very strong fundamental event, the Brexit, that will play an important role on what traders will likely do after the announcement. So looking at the weekly chart, let me open the weekly chart now. Yes, this is the weekly chart. This was wave A of wave 5, and thus we need a very strong impulsive rebound for wave 5 to complete wave C or wave 4, and then a continuation of the downside. So I guess we will know soon. Moving on, the Japanese yen, and we'll see here. We can see the rebound that we were expecting, we were talking about. I'm going to the 1-hour chart first of all. I was talking with my previous yesterday's update actually that this SMA is very important for the continuation of the rebound. This rebound, I'm talking about this rebound, and we finally got it after a false reversal here. We can see how the RSI shows divergence here, and this rebound is clearly bullish, but we need to see a break above this level to gain much more confidence on the continuation of this rebound. Going on the 4-hour chart now, we see that the rebound also broke above the 55 period SMA here, which is important too. And on the daily chart, we see that we see the context within which the rebound is happened, and we see also a bullish cross at the 14-day RSI, which is 9-day SMA, which is very good also, and that means that the path has opened towards this SMA at first, which is at 107, and this SMA, the second point, 108.10. Looking at the weekly chart, of course, we see that we are at critical levels for this exact scenario to come true. I'm also here examining alternatives, which I'm gonna show you with the weekly report, but probably what I see is that we may have 1, 2, 1, 2, and the red wave 3 being here. This will be red wave 4, this will be red wave 5, wave 3 blue here, that would be a wave 4 blue, and that would be a wave 5 blue for a wave A here, and that would be very bullish from here on, because this whole move would be a wave B green, and therefore we have much more upside from here. Okay, there are a lot of alternatives here. Some are very bearish too, but they're not the subject of this video. All I'm saying now is that at least in the short term, what we saw here was a strong rebound that goes well with our broader count, and our expectation, most of all, we need to see a break above this level to gain more confidence. So I'm moving on to gold. Gold continues to slide lower. No big moves so far, however, and it is trading sideways to downwards, but it remains under pressure below this 55 period SMA, 55-hour SMA. Looking at the 4-hour chart, we see that the 21 period SMA is here the one that presses the gold to move lower. And on the weekly chart we cannot see anything special, because the only thing we can see is that the divergence between these highs here and these lower highs on the RSI. And on the daily chart, of course, we are currently at the place where has proven to provide solid support, and this is those two SMAs on the daily chart. We need a break below them to see the acceleration that we expect towards this level at first, the 1200 level at first. Moving on to the crude oil. Here we have the decline as we expected. Going directly to small time frames, it looks like this was an impulse, and this looks like it was a correction, like ABC, and prices are continuing lower from here, which will eventually push them lower towards this level here. But if our count is correct, and if this is an ABC, an odd looking ABC, then we will have an acceleration to the downside. Looking at the 4-hour chart, we see that prices were unable to stay above the 21 period SMA. They broke below them. Now they're testing this SMA, and all those levels are important for the continuation. And if we finally break below to have let's say an equal wave, this wave with this wave, we will be under all SMAs, which will be very important, because as you can see, these SMAs were providing solid support for the whole uptrend so far. So the break, a decisive break below them, let's say not decisive, but the second break below them, this is the first, and the second break will eventually be important for the continuation of the downtrend here towards this level 135, 136. On the daily chart we cannot see, let me open it like that, okay. On the daily chart we cannot see anything important. We just see that prices are around the 21-day SMA, and of course on the weekly chart, nothing special. This is a very small candle still under development. Now the German DAX did a very sharp rebound, and it is a bit odd that I continue to count that as a wave 2, because it will be invalidated very soon, and I will have to come up with another count. And eventually it will be invalidated even before this video will get to be uploaded on YouTube and you start watching it. But I didn't have enough time to go through it and find another count. All I see is that on the weekly chart prices are facing resistance of this 55-week SMA for third consecutive time here, and if it breaks higher, that will be a very strong bullish signal, but until then this should be considered as a level of bearish reversal. Looking at the daily chart, I don't have anything to say. This I didn't expect such a rebound, and it looks also in lower time frames, it looks impulsive, but we will see what will happen after the event. Looking at the S&P 500, the picture is a bit different. We don't have such a strong rally. We just have a bounce after a correct after a choppy price action here, and that rebound was also limited by the 78.6% Fibonacci retracement of this decline. If I drag this here, because as I said on my previous video, this could be wave 1 and be ABC, but this could also be wave 1 here and then have another correction here. So in both cases, those levels here are important in terms of Fibonacci numbers. So if we look at the weekly chart, we still remain above the 55-week SMA, which keeps the momentum bullish on the long term. On the daily chart, this last push today brought prices above the 21-day SMA, which makes it bullish, but the day is not finished. We need to see a close above this SMA to become more bullish, or a break above this level, of course. And on the 4-hour chart, again, we had a battle between the bulls and the bears around those SMAs, and finally a rebound from here, but it doesn't look very bullish to me so far, at least. We will see in the future. So that pretty much covers everything I had to say prior to the event. I hope you will find this video helpful, and good luck trading for those of you that will trade the event. I'm gonna say it again, in terms of risk reward ratio, not in the common sense, but accepting risk on your investments, to me any kind of pips does not justify the risk that this event will brought to my account. So I prefer not to trade this event, and I strongly advise you to do the same. That's all from me. Thanks for watching. Goodbye.